Good morning, folks. Welcome to the weekly meeting, 11/4. Coming into the end of the quarter, the end of the month, the end of the year. Hopefully everybody's trading is lining up with their goals. Right now, I want to have a little discussion about the GC chart. Okay, as everybody can see, we've closed last month out. I'm kind of going to go over why I believe that we're going down and we're going down hard. And in order to do that, I'm going to go ahead and pull up some old video footage of your boy, ICT. I'm going to start the video off about the 22-minute mark. All right. We'll listen to about, 10 minutes or so.
He's talking about, I know somebody that used to trade on the floor and he's laughing at ICT right now. Okay. Go into your charts. Forget that. I'll let you have that perspective for a moment for the argument, but go into the charts and see if what I'm not suggesting to you is the truth. Okay. I could sit here and do a complete series on all the things that lead to what I'm saying is true, but none of you will still believe it. I'm showing a live account and entries and executions, and they're still doubting it. So no matter what I do, there's going to be people out there, but you didn't do it wearing orange. You didn't do it in your Corvette that you flip, which I don't flip Corvettes. You're getting all kinds of stuff out there, nonsense. But you don't see anybody going into that Robbins Cup. Hello. So we're looking at the swing lower here. Market breaks down, trades break back up into this fair value gap here, and sells off. And there's another fair value gap right there. Trades up into that as well. This is a 1-minute chart. So it's giving you multiple points of execution that you could trade on, and then dives. See these two candles here? That's one consecutive bearish order block. The opening price extended out in time. Why is this a good bearish order block? Because it has that gap, and it's taking liquidity. And there's a market structure shift. There's your high frequency, high power, high probability bearish order block. Forget everybody else's interpretation of my concept, the order block. That's it. Okay. What is an order block? You see a lot of people asking, what is an order block? Only my students in mentorship know what an order block is. Okay. What it is, it's a change in the state of delivery. Okay. It's a change in the state of delivery. The market's being offered higher, 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 higher in these two up-close candles. How did this series of up-close candles begin? With this candle's opening right there. That opening, once this candle trades below it, that changes the state of delivery. So you go back to that point of reference right there. And that's why it's sensitive. The algorithm remembers that right there. Okay, that's all I'm going to give you on the free mentorship level, but that is your answer. Okay, that is what an order block is. It is a change in the state of delivery. Much in the same way, all of this movement down here, all these down closed candles, the opening on that candle starts this series of delivery on the downside. When that opening price gets violated here, it changes its state of delivery. Now it was offering sell side. When it goes above that opening, now it's offering buy side. What will it be doing after that? It will be looking for buy stops, buy stops, buy stops, because it's offering buy side liquidity. See, you guys don't even know what you're talking about. You're trying to teach my concepts, and you have no idea what you're doing. You're talking about things in the left side of the chart. Trade it. Do it. Okay? You don't even know what you're looking at. And you're hurting the people you call your students. And then right away, when people don't know how to use them or understand what to do with them, they'll say, well, this stuff doesn't work, because they learn from somebody who doesn't know what they're doing. Okay? It's blatantly obvious what it is, but okay. Same thing here. Buy side is being offered, until that opening price is violated right there. Then the change of state of delivery occurs. Now the market's going to be doing what? Offering sell side liquidity. What's that mean? It's going to start going lower and attacking the sell stops. All the sell side liquidity. It's offering it to the marketplace. That's what's happening. That's what the algorithm is doing. That's what the algorithm does. Okay. You buying and selling, me buying and selling, everybody over there on Reddit is not going to change anything at all. It's not going to do anything. And the argument that defeats all that buying and selling pressure is how do you argue against the bull squeeze and the bear squeeze? There's a short squeeze going on. The market's rallying up when it's been bearish. That's just their cop out. That's their way of saying, well, you know, everybody's shorting and now they're covering. So there it is. And I learned the same thing, folks. I believed all that garbage. 2,000 plus books. I know what those books told me is what you are learning too. Because the same people teaching today, retail garbage, Elliott Wave, this and that, it's all stupid stuff, man. It has nothing to do with why these markets are doing what they're doing. Zero has nothing to do with it. Don't worry, I got proof today. But the market goes down to that 50% level because it's going down to what? I teach you. What did I say in the first video? It's going down from a premium market relative to this low and this high. 50% is here. That's equilibrium. So it's going to go down to a discount. And that's that gap right in here. It doesn't look like a gap so much here. But if we go back up one more time, that's that single opening right there. On the 2-minute chart and then on the 1-minute chart, it's 2 candles that make that up. But you're going to have to do is go through a progression of going from the 3-minute, 2-minute, and 1-minute chart. And you'll get your market structure and your areas of where it wants to look for an imbalance or old low, old high. And it just makes it easy.
All righty, folks. Same scenario, man. Same scenario. We just not on the 2-minute chart. We on a higher time frame chart. Let me shrink this in. Throw my little fib on here. Even if you don't use the wicks, you can use the body. Price needs to come down into the discounted range. The discounted range, if you look at it, there's a gap, same gap that he talked about. We got to get to this gap. We had the old high. We ran above the old high, immediately fell, pushed down, gave you the bearish order block, traded back up into the gap, right? Into the gap of that order block, which is why I even had it marked. This was the gap that I was targeting, right? You could have targeted this gap, but the reason I targeted this gap was because we had broke these lows with that gap. So I chose to target that gap. I put my stop loss above that high. And I think the trade is about ready. So here's the beauty about a trade setup like this. Even if it goes higher, we don't have to enter this trade. You can enter the trade for the sell once we break back below the moving average. And, you know, I talked to some people this week, and they were thinking that whenever I say you got to wait for price to break below the moving average, they were thinking it's with an order block. What I'm telling you is the candle needs to close below the moving average if you want to save entry. There's all sorts of ways you can drop lower than the 4-hour after that to find an order block that's going south once you get the close below the moving average. But you don't have to try to be a catbird on this trade if you don't, especially if you don't see it like that, right? If you don't believe in it, you don't have to be catbird. But if you believe in the trade, then you can take the sell. That trade that I called out the other day, when it dropped from here 100 and some pips, right? I remember talking to Rose and told her it could still go back up to her. Are you on the call, Rose? it can still go back up to her position. So it doesn't matter where you had the position. But if you're biased for the long on this trade, then I would be very afraid, because of the video we just watched, right? We would have to break through this bullish order block, and if that's the case, then price should never break back below that 4 hour. But I'm looking for the sell, right? That's why I was biased. And then for fundamental reasons, if we have that war kickoff, I look for the pound to get weaker, and I look for oil to get stronger, and that's why I would look for the Canadian dollar to be stronger than the pound fundamentally. So it's not like you're just going to jump in the trade when the market opens, but that's what I would look for is in terms of a trade setup for GCAD. Y'all have any questions, comments? You see it differently? Or you I'm sorry, go ahead.
I just said I'm convinced now.
Well, I mean, it's either going to break back down and give you a close below that 4 hour moving average, or it's not. And that's kind of just a cheat sheet, based on how the market moves. Now ICT doesn't use moving averages, but if you look, there's an imbalance right here. Maybe it wicks up to this imbalance, right? But after that, I would look for price to head back down. Any questions? All righty then. Bo.
Good morning.
What question? What were you asking me?
Oh my God, I don't remember.
So you didn't have any questions?
No, I watched well, I think I like the end of August videos last night. Your video.
Mm-hmm.
I forgot what pair you're breaking down, but you're talking about the moving average and
Probably GN.
probably, but you're like just speaking on how like when we break a high and it creates an imbalance when we trade up into the imbalance. That's how we know we're going to sell or something along that line.
Yeah. So you got it a little bit backwards. If we're going up, that's correct. But in this case, when I look at that monthly candle, this push down, we broke this low, right?
Yeah.
Now I'm looking for price to trade back up into the imbalance that was created when we broke the low. And then I'm looking to take it short. And I can take it to the low, whatever swing low, if the market is going down, right? Prior to this, I would look for this up move, right? I would look for it to break highs over here. And if we break highs over here, then I want it to pull back into the imbalance and then push higher.
Oh.
So this is just a game of finding out what the market is doing as far as you got an impulse move that broke a high. Now you want it to pull back into the imbalance, either to push higher by breaking this high, or it will fail to break the high and it'll go lower. And then you're eventually looking for it to break the lows way down here. So GN, it's pretty much the same setup. This was the same thing. Bearish order block. We wanted to trade back up into the imbalance. Then we wanted it to push down. I guess I can go back to the GB. Let me see, GBP CAD. Because for me, when you go back to look at what's going on as far as the 6-month chart, right? This kind of tells the story. If you use this moving average as your guide, we're either going to break above or we're going to push back below. We've, for whatever reason, we can't get past this level, right? So I would look for a price to push back down. And maybe we're just going to touch or clear up this fair value gap. The previous couple of times we didn't make it down here. So maybe we'll come down and touch the fair value gap or do a consequent, whatever, encroachment, a CE before we push back up. But to me, if you have a higher time frame, understanding, so to speak, or viewpoint, then maybe you can see a case that we can touch here, right? And then once we do finally break this level, you can see this huge imbalance in here that needs to be taken care of. So eventually, once this price starts pushing up, then maybe we can look for it to clear out this imbalance. Now, this is a 6-month chart, so this could take years. You can have 10 of these candles form before we actually make it up here, which would be 5 years. So in my opinion, we are probably just pulling back to go higher on the 6-month chart. We have relative equal highs here. I would have liked to see this break that high, but we got relative equal highs. Come back to the imbalance, push higher. This whole move right here, price comes down, you go up and break this high, you would expect to see it pull back to the 78. It actually swept the lows, it pulled back further. Swept all these lows, which told us as a trader, if you were watching this on the 6-month charts, which we weren't back then, right? But we would have saw this liquidity sweep and we could have got in for the buy. And you would be way up now, and this would just be a pullback, and maybe a 78% pullback from here, which it is not a 78% pullback, but maybe you're going to get a 78% pullback if you got in way down here. But the point is, I would expect a pullback to at least this fair value gap area, and then maybe look for it to push up after that. Now switching back to GN. We talked about GN and GA in June. I remember talking about the price needing to pull back to the 50% mark, which is way down here. Well, those candles, when the month opened up, when the new 6-month candle opened up, they both took off to the upside. And we kind of forgot about them or stopped trading them or stopped looking at them. Eventually, they started pushing back down, and now they hit the radar again. So then when you look back at your points of reference, you say, well, man, they need to come down to the moving average, and probably need to come down to the moving average by the end of December.
I know what my question was. It was for this. So why don't we pay attention to hitting the golden zone on the 1 month? I think that's what I was asking you.
You mean on the 1 month?
Like if you look at this candle, it hit the golden zone.
Right here?
Yeah.
Well, who said we weren't paying attention to it hit the golden zone? So
well, yeah, like it's going to go based off of the 6 month. Like we know it's going here.
That's not even the golden zone for the 1 month.
So what is it?
It might be the golden zone for the 3 month. Maybe it was the golden zone for this 3-month candle. My point is, whatever way you're looking at it, once you measure this candle, let's just measure it. this is why you can't come in the group 8 months later and try to get a redo. So the golden zone for the 3 month is way down here. We haven't touched it. Now we had this 3 month candle, and now this new one, which went up to fill imbalances on this wick. And now it looks like we're pushing down. It will more than likely push through this zone. Here's the 78 on that 3 month pullback. And here's the golden zone for the 6 month. But you have several different reasons, right? If you look at these wicks, see it's wicking out in this area, the same area that it's always wicked out in, which gives you a clue that it might not break this high, right? Now we got 1 month left on this, actually almost 2 months left on this 3 month candle, but everything is pointing down, right? So the only thing that we have to pay attention to is price going to break through our moving average? So you just keep walking down your time frames, right? This is your 2 week candle. We tapped into this bullish order block and we got the bounce. Now, I want to see price push up, right? Push up and mitigate the 50% mark of this red candle and then start selling. What if price pushes up and keeps buying? Then you can't sell it. Are you following? You tracking that?
Yeah.
So if price pushes up into this area and then turns around, then you know you got your sale. It's on and popping. If it pushes up and then keeps pushing up, then you know you can't sell it. Your bias is wrong.
Okay.
But the first thing first, what do you need to see down here?
I don't know.
Oh, Foley, what do you mean you don't know? So price came down, low, high, lower low. We got to break a high, right? You want to see price break a high, pull back 78, and then give you your up move. So you don't have to worry about hopping in this trade when it breaks this high. You got to wait for it to pull back. So hopefully Sunday in the first 4 hour candle, since this is a 4 hour chart, we'll get a break above at least a high over here. Then you want it pull back. Pull back, you can get in and buy it up to this area. Now, remember, if you're going to be part of this buy, you're only, I call it guaranteed, which we're not, but your safety trade is to take it to the 50. If it goes past the 50, cool, but don't hold this and go to sleep because you're in profit, unless you severely reduce your lot size, because it can turn around at any point at its 50% mark. You got a bearish order block in here. I get it. We got a fair value gap right above that bearish order block. So maybe you're going to get a bounce and then it goes higher into this fair value gap and then you get the sell. Typically, what we've seen is that we get our move on Tuesday night. So, I'm not telling you to like this a guarantee, but if it's me, I'm not really looking for this to sell seriously until Tuesday night or Wednesday. So I would be looking for this to be bullish at the first part of the week and then bearish at the second part of the week. That's what I would like to see in my perfect world. But to break this up in increments, I want to see the high broken. I want to see a pullback. Then I would get in for the bullish move. All right. Maybe this bullish move takes until Wednesday afternoon and then it starts selling. Maybe it takes until Thursday morning and then it starts selling. What I'm telling you is make sure you get what you're looking for as far as the push up, break the high, the pullback to let you in the trade. Then you're going bullish until you get to this area. Now you're looking for a short from this area back into the flow of the trade. You understand?
Yeah. I just didn't expect it to buy, but I get it. More gas for the move that we're expecting. I thought we were in for the sale.
We
So
are in for the sale.
I know, but I'm like, I'm in that trade now, and if it's about to buy back up, then
well, I don't think you should worry about that.
I
Where
think you already got
did
yourself in.
where did you get into the sale?
2.8429.
8.4. So you got in up here somewhere. So
Mhm.
even if it comes back to your entry, I mean, no harm, no foul. What you could
Nothing's
do,
been happening. It keeps coming back to my entry, and
well,
then
okay, don't worry about that. You're listen, this trade is supposed to take you 1,000 pips.
right.
Stop rushing. Let the cake bake. If you're worried about that, if you see what I see, you don't worry about your sell positions. Put in a buy position.
Okay.
Your sell position should be permanent. Put in a buy if you want to buy it back up. Close your buy up here. Open another sell position once it gets back up here with the money you made off the buy. That's ideally how you want to play it. Or you could look at it and be like, hey, man, I don't have no action this week. Now, I'm talking as if this is going to do that.
Hello.
But it very well could just go back and touch the same area and push down. We've seen that a million times. So I'm not suggesting that you're guaranteed to buy up to this level, because many a times we've seen GN, and if you look on this side, it just rides out. It rides that trend line, and it just keeps coming down. It never pulls back. So it's not as if we're guaranteed to get this pullback. Does everybody understand it? I remember us in June taking a trade that we thought was going to pull back. We got in for a buy, and that thing, it was like falling off of a mountain. Y'all remember that? We probably got into a buy. This is September, but where is June? It was sometime this summer. Maybe it was September, but I thought it was in June. But June looks like it was going up. Maybe we got into a buy. Do you remember when that was, Selena?
Yeah, I don't remember the exact date though.
Yeah, but we tried to buy it back up and it just never bought up. So if you look at this over here, this is kind of what we're doing now. We just we made that initial push down. Now, if you're waiting for this to buy back up before it sells, it never really bought back up. It just kind of went sideways for a little bit and then it dropped. We could get that same thing here. Maybe it never buys back up. Maybe it just goes sideways and then falls. Which is why you don't want to close your sell positions too. Elfie, are you in this trade? Marv, are you in the trade? I know Marv, I think, took.
Sold it on last week, but
You got out?
yes.
Okay.
Yeah, I got out, but I'm gonna get back in. I bought up on Friday afternoon.
Okay. Who else?
This is Rosa. This is Rosa.
Oh,
I'm in the trade.
You're in there, Rosa? See?
I'm
Yeah.
in it.
Where did you get in at? Rosa, what was your entry?
I can't find. Looking for my phone. Oh, let's see. Wait a minute. I'm gonna tell you. Hold on. Let me go to my phone here. Ooh. I got in at 2.08260.
20826. Okay, that's not a bad entry either.
But yeah, what I'm afraid of is that it's gonna go up and
But don't be afraid, Rosa. So listen, again, if it breaks a high and pulls back, right? Like on the 4 hour, it broke this high right here. If it pulls back and lets you in, you can get in for the buy. Just get in with the same lot size you're selling it for. And if it buys up, who cares? You're not losing anything that you made last week.
okay.
Once it gets here, if it buys up, then you can always close your buy and add a new sell position once it starts selling. So you'll have your sell position from last week and you'll have a new one from this week.
Oh, okay. Yeah, see.
And same thing, if you get in for a buy and it goes just a little bit and then starts selling, then you just close the buy position out and you can add a new sell position.
All right.
Adrian took the trade. Okay, I see y'all. Who said there was an EN? EN is another good look. We broke this low right here. We went through this low, tapped into this OB. Maybe we'll pull up. Maybe we won't. Same sort of scenario. We can just fib. Let me see, 2 week. I could fib this 2 week candle. So maybe there's a scenario where we buy back up into the zone or up here to the imbalance up here, which would be cool. They're both, I mean, this is a very attractive area to buy back up to if it buys. But in order for this to buy, you have to wait until we break this high. There's a 4 hour chalk. Then it'll pull back your 78%, your 62 to 78%. You get in the trade for the buy. It buys up. You take your profit. You sell it back down once it gives you that bearish order block. You can add you another sell position and you roll it down.
So Todd, I have a question for this one. Go back to the 2 week, please. It looks like it tapped into that 2 week order block
I don't disagree.
to then actually continue bullish. Would you not? Okay.
No, I wouldn't. No, but I can see why you might look at it like that. The reason I don't look at it like that is because when I look at this 6 month candle, this is my golden zone that I want price to come to. It's not to say that I'm right and you're wrong, but everything that I'm looking at, if I fib from here to here, it hasn't reached my pullback area either. Swing high from swing low to swing high, it's nibbling the 50%. There's an imbalance right here that for me, it at least needs to come fill the imbalance. If we're bullish. Now, I'm not saying you're not going to get a reaction right here. That's why I expect to buy up. But I'm biased for this thing to tank.
Okay. Well, I can see, looking at the daily now, it made a lower high and yeah. So,
You didn't see that on the 2 week?
well, I just saw the 2 week order block being tapped in too.
Okay, so what about this? If we just look at the 2 week in itself, right?
Mm-hmm.
Which high, low, high, low, high, low, no high, right?
Yeah.
Why wouldn't we just break higher? I mean, I guess this 2 week candle could possibly buy up and break all these highs. So if this buys up and just keeps buying, then that's cool, right?
Mm.
But if it doesn't buy up and keep buying, then you get it. You wait for the sell. Either way, you're positioning yourself for the move, right?
Mm.
If you
Hey Todd, can I say something real quick?
yeah, go ahead.
Looking at the 2 week on EN and the 2 week on GN, the 2 week on GN, I look at moving averages, and the moving averages are in a spot I can see it buying on EN, but on GN it's a bullish order block too, but I believe it's
But
gonna sell.
Well, I agree.
Okay.
Moving averages are different, but I mean the entire point in you buying to sell is you're not going to be on the wrong side, right? And the same thing with GN.
Right.
If the moving averages are going to be on your chart, regardless of the pair, right? And I'm not saying you should not be cognizant of it, right? You're going to get a reaction. Price stopped at the moving average. Now you're going to buy it. We expected to buy, but it doesn't mean that price can't cross your moving average, right? So even if price stops at your moving average and retraces, there's nothing saying that it can't cross. You still have to look at the structure. You can't ignore the structure around the moving average. So we got a lower high. So either we're going to buy up and break this high and keep going higher, or we're going to buy up, fall short, and then start pushing down. We will know what we're going to do by this price when we buy it, right? When you buy this, that's a 200 pip move up to this imbalance, right? If you're looking at this structure, we came down, we broke these lows. Now all I'm saying is I expect us to trade back up into the imbalance and then take us lower. What you're saying is you think it's just going to buy up and keep going. And I'm perfectly fine with that. I'm perfectly fine with that. I do notice that the imbalances are different. I mean, the moving averages are different. This is what you're looking for, and I say kudos to you. But what I'm doing is once I get to this imbalance, I'm not just going to hold my trade whenever I get the bounce right here. I'm not holding on to that buy because I think it's going higher. What I'm telling you to do is when you get this buy and it bounces right here, you might want to get out the trade. Even if you're biased for it to go higher, right? If you might be biased for this to go higher, but when it goes here, I would take my profit at them 200 and some pips. And if it pulls back, you're going to be able to see an imbalance that was created as it started buying up. So when it sells, you can either sell it down to the imbalance or you can just wait to see how it reacts at that imbalance down here. Does that make sense?
Yes. Thank you.
I know some people can't follow that line of thought, but Yeah, I think we're selling. You know why I think we're selling?
Wow.
I think this turn took too long. Why do you need to do all this Wyckoff up here? Why do you need to build all that liquidity? If you're just going up to pull back to go higher, why wouldn't you take the liquidity from this high, like so, sell back down to whatever imbalance to push higher? Just asking, that's it doesn't make sense to me. That
Dang, I can't even see them.
you say you can't see what?
It's probably just my phone. I can't see anything.
You say you can't see an imbalance? Well, it's not on there. There's not one. Let me drop down to the hour, because there has to be one around on the hour. Okay, so this imbalance has been mitigated pretty much. There's really not one. I mean, here's the imbalance right here. It's still.
I was saying I couldn't see anything because my screen was black, but I can see now.
Right, I feel you. But I'm just
Yeah.
trying to play either devil's advocate, or I want to see a reason, right? That if this pair was going to be bullish.
Bye.
Yeah.
Oh yeah, I think or if it's gonna be bullish, it definitely has to hit at least a 61.8, which it hasn't done yet. It just touched the 50%.
Right.
So
And
I'm really looking for it to sell a little bit more.
yeah, it bothers me that we got the Wyckoff action like that. We got the entire distribution schematic before it started pushing down. If it was just going to be a pullback, why not double bottom and roll up? Why distribute? And maybe I'm reading into it, but I'm definitely biased for this thing to cook like Crisco.
I wanted to at least touch that 61.8 before it buys up to a zone or wherever.
Yeah. I'm with you. I mean, I can see how people would have multiple opinions, right? I mean, I can definitely understand it. And the beauty of this thing is it's going to work itself out. Somebody's going to be right, and somebody's going to be wrong. But in the meantime and in between time, there's hundreds of pips that you can take out of this trade. And for the people who just don't want to look at a trade setup, like this trade setup might not be your best trade setup because of its positioning on the chart. I definitely would have rather traded GN, because to me the GN setup is a lot better. It's we have the advantage as a trader, especially when it comes to the 2-week chart, when we can say, okay, price closed below the moving averages, I'm looking for a pullback and a sell.
A lot of people don't know that conversation. They don't know to have that conversation. They don't have enough experience to see that yet. But you will see it because you have people around who are more seasoned. So they have more candles under their belt. They know how to figure out, okay, that's a Wyckoff pattern. You don't have to know Wyckoff. You just need to know that that's what it does when it goes sideways and then it comes out of it. So that's a seasoned viewpoint, and you can play it to your advantage.
And for me, this trade setup was the same thing that GC trade setup is. Let's look at GC real fast. GBP CAD. We just looked at it, but I just want to take a glance, right? Y'all see where we had this red candle with all that imbalance, and we trade back up into it, right? Basically wick to wick here. Now we look at GBP, NZD. We had this massive imbalance on this red candle. We traded back into the imbalance. We didn't go as high wick to wick, but we traded back into the imbalance. And now we got the sell-off. So
I like that. I like how it's clear, like the 2 week broke the 2 week low and
right
pulled back up.
Yeah,
I like that.
I agree.
Yeah.
And this is what I'm saying as a trader. If you identify this, if you looked at it, you say, okay, I like this setup for that reason, because hey, we broke the low, we have the imbalance, we know we need to trade back up into the imbalance. All I got to do is put my stop loss above that high, and we can take this south, right? So, however you came up with it, and plus it was the end of the month. We had traded, if you look at that monthly candle, we traded back to the position we needed to trade, and now we can take this south. Now, some of you will say, hey man, but the moving averages are in the wrong spot. Yeah, they are on the monthly, and they're always going to be on the wrong spot until we break through. So I'm not saying ignore it. We sold down and we stopped at that first moving average. We stopped. We got a reaction. You can see the wick. We bounced off that moving average. We knew that we were going to get a reaction. If you had taken profit there, that's cool, whatever. But I believe it's going to buy back up into our zone up here and then sell down. However you see it as a trader, it's fine.
They want the trade.
That's
They
it.
want the trade, right? If you want the trade and it bounced off the EMA, it gave you chalk off the EMA. There's your buy.
There's your buy. And there's it can buy 200 pips up here, but maybe the buy falls short of the 200 pips. Right. As long as you're cognizant that, hey, this thing can possibly sell down, then that's cool. And I showed you guys, based off the 6-month candle, why I'm biased for it to sell at least to the 6-month zone. It's fractal, baby. It's fractal.
Hey, for Elfie and whoever else might be in the UK, I mean, the other thing to look at is, I mean, are they printing money over there? What have they done with the interest rates over there? Have they raised them? Have they lowered them? I mean, what is going on a fundamental level that would suggest to you that the currency will get stronger, or what's going on that would suggest to you that maybe the currency will get weaker? I mean, we know that there's a Ukraine war. We know that there's now a Middle East hotspot, So
did the currency get stronger during those wars, or does it get weaker?
Right.
We need you guys for that, because you're on the ground, right? So you guys become our go-to for that. You're our antenna for that. So we're going to read it together.
Right. But for Elfie, who lives in Germany, I believe they use the euro. Is that correct?
Yes.
What have they done with your interest rates? Have they printed euros?
I really don't know.
They've left them the same.
Well, you look at the price, right? You see that they're in a war, and you see that their price is not going to 115. It's going to 105, back to $1, back to 95 cents. That means they are printing. We know they are, because they're in the war, and we're helping them. We're giving them money. So see how it adds up? And the EU is tied to the GU. So GU is not going to 130. It's going to 125. It's going to 120, right? It's heading down. They're in war. That's what war does. It's expensive.
Y'all see this?
Yes.
Y'all remember having a risk on, risk off conversation?
Yeah.
What do we always say about the GBP? Does anybody remember?
I do not remember.
Risky one, Because it's not one of the safe currencies. Yes, the safe
Exactly.
currencies was JPY and chess.
And the dollar.
Okay. But GBP is risky.
Exactly. Which is why, fundamentally, I expect it to drop.
Okay.
When you remember, they raised the interest rates for GBP and we were expecting a push to the upside and it was delayed. It did push. It pushed to 131. And then it's been bearish ever since. That's what interest rates do. It's not a good thing. You will come pay the piper. Yeah.
There's your head and shoulders right there, Evan. Now, what do we have to see as traders? Either this high is going to get broken or this low is going to get broken. We can have everybody has an opinion. But at the end of the day, if this high gets broken, then my opinion ain't worth 2 cents. But if this high is respected and this low gets broken, then my opinion is confirmed that we're going lower. In the meantime, as a trader, we have to decide, do we have a trade in here? Like, can I trade this up and sell it down, expecting these lows to get challenged? That's all I'm doing. And on this week chart, if I look at this 1 week chart, all the moving averages are in my favor. I don't care what Selena and I'm talking about. On this chart.
What I was saying, sir, is that even though it has a bullish 2-week order block, the moving averages are in our favor for the sale.
I know, ma'am.
But EN, okay, I just wanted to put some correction on the statement.
I want to issue.
I just want to put some correction on the statement. That's all I'm saying, sir.
But I still want to issue the rebuttal for EN.
But EN, the moving averages are in the favor of a buy. If you're just looking at the moving averages.
I severely and vehemently disagree.
Okay, well, just do me this one favor, sir. Just humor me.
I'm going to do you a favor after I make my case.
I hadn't made mine completely yet.
You already you said it was in it for a buy, and I'm telling you that it's not for me.
No. I'm saying EN on the 2 week. There's a bullish order block, and the moving averages are in favor.
Remember when I said we have to pick the time frame that gives us the advantage?
Absolutely.
I'm just showing you the time frame that gives me the advantage. That's all. Thank you, ma'am. Thank you for your.
You're so full of whatever.
This was my key. This is me personally. This is what I look at.
But you always say your higher time frames trump it.
Y'all see how she doing me?
Whatever.
Can somebody throw the replay flag? This is what I'm saying.
Can't be a replay because you ain't let me finish my play. But go ahead.
Listen, guys. If Selena, stops dominating the conversation, these lows right here got ran on this down move. I don't know how Selena comes up with her stuff, but this is what I came up with. These lows got ran on this down move. What my mentor told me, ICT, some little dude that live in Maryland, he always cussing. He told me that when these lows get ran, and the price should pull back to the 78, which is me and his optimal trade entry. You can Google that. That's me and ICT's optimal trade entry. So once the price came back up here, he said I could just hit sell and go back to working, at
Dang, you hit it on the money.
At the Flowers.
But my mentor
Flowers
told
Bakery.
me.
Wait, can I finish? Golly, are you ICT?
Oh, whatever.
He told me that I could put a sale in and go back to working at Flowers Bakery. You know, and ignore the horror.
Not Flowers Bakery.
Yeah, that's what he told me. He said
That's where I work. He
I
tripping.
could ignore the horror movie, because if I watch the horror movie, I might be tempted to exit the trade, and I would miss all of this action. And when he told me that, he said, once I entered the trade there, I could target this swing low, and then I would target these next lows, right? Down to equilibrium. Now, where is equilibrium? I would probably have to fib either from the bottom here, this move, or I would probably do it from this move.
Yeah, because it already touched this, look like 78 on that other up move.
I would do it from this low to this high, and all these lows, I don't think that's right. I think I need to do it with fib. Okay, so I could trade price down. Here's equilibrium. So maybe this low. Here's one near the 78. So I could at least take price to these areas. This is where I would look to take this trade, to this low right here. And it's relative equal lows. Maybe we break it, maybe we don't. But that's still, if we pull back to this area. Brad.
Hey, Todd. I'm not denying that, Todd, but what I was saying on the 2 week, because my mentor told me the higher time frames are, you know what I'm saying, your bread and butter. So on the 2 week that you refuse to go to, but that's okay.
But
it is showing.
Is it 2 week higher than the 6 month?
No, but you was
Okay,
having
okay,
me your whole analysis off of the 1 week.
I go to the 2 week. All right, 2 week. Now
that's all I asked.
All right, 2
Where's
weeks.
your moving averages?
I don't have them. I look at the structure.
You know what? Okay, I'm done. I'm done. I'm out.
Here's your moving average.
All right, that's my point. The moving averages are below, right? You got the bullish order block. You have the moving averages in the right place. The last 2 week candle tapped into that 13 moving average. So if you're doing that, then that is a perfect entry if you feel that for the buy. That's all I was saying. If that's the method that you use to trade. Now on GN, it's the exact opposite. On GN, the moving averages are up top, but even though it's a bullish order block, I feel confident that it's still going to sell. I was just saying you got two bullish order blocks. You got two bullish order blocks on two different pairs. One of the moving averages is in a different place that dictates which way the trade should go. That's all I got. I'm dropping the mic.
Don't play with her. Don't play with her. Don't play with
Thank you, OG. Thank you.
I don't disagree that GN is a better trade setup, if that's what you're saying. That sounds like that's what you were saying.
That's exactly what I'm saying.
Yeah,
because you have more confidence to know what GN is doing than you do on EN.
I agree 100,000.
Well, praise the Lord. Praise the Lord.
Ooh,
I'm ready to make this money, OG. I'm ready to make this money.
Hey, Dion.
I'm with it.
Is Dion on the call?
Dion.
Janice.
I don't see
Dion. I see Nay Smith. Dion. Janice. Bridget.
I'm here.
Who is this, Janice or B?
Janice.
Janice, did you make money on EN?
I sure did.
Okay, that's all I wanted to know. That's all that matters.
I did too.
You run up that bag. So either trade, right? Like they don't have to be perfect. We all have differing opinions, especially when you get down to the lower time frames, right? But the move, even though we can argue on where we think the trade is going, right? If you had got in this trade, once it crossed over the moving average, you collected 272 pips. That's beautiful. You know what I'm saying? So, however you saw this trade setup playing out, and I guess the more important piece is, if you don't see it going further, right, or you don't have, you didn't hold your trade, you can trade it both ways. Even if you held your trade, you can still trade it both ways if it gives you reason to trade it the opposite direction. And when I say reason, I mean a chalk, right? If it gives you a buy move, if it goes up and breaks a previous candle's high and it pulls back to let you in the trade, then you just take the buy. But you have to have an area that you want to take the buy to, right? And I would suggest that you fib the 2-week candle, right? I would fib that 2-week candle. I would mark my area where I would take the buy to. So if you're in the EN trade, or if you want to trade the EN move, right? Because some of y'all think this is a bullish move. The right way to do it is to enter for the buy. And you enter for the buy with a sober mind, saying, hey, even if this is not a buy, like since other people see that this could sell, you could enter for the buy and target these areas, the golden zone. So if whether it's buying or selling, there's a good chance that it's going to pull back to this zone, right? And this zone, from where it is right now, is 188 pips. So all of us can make 188 pips if we enter EN. Now, whether you hold this trade, if it pulls back for the up move, or whether you close the trade out and enter the sell move, that's the only dicey part of it. And what I would tell you is, I would wait till I see chalk on the 4-hour at least before I'll close my buys out and got in for the sell. Because if I'm buying to sell it, then I shouldn't worry about how much money I make on the buy up. The goal is just to hold the buy until it chalks and shows me that it's selling. So then I can enter a sell position. If you're buying because you think it's buying, then a pullback shouldn't hurt you either. But you need to pay attention. If it shows chalk on the 4-hour, then you say, well, my opinion might be wrong. I might need to start closing out my buy and maybe looking to enter a sell, or maybe you need to see it break the low. I don't know. It's all a personal opinion. Everybody tracking that?
Yes.
Okay, so here's my beef with what I'm doing. My chart is showing, and I have markups on my chart. It's not helping anybody. Does somebody else want to mark their chart up, or show what they're trading with the markings? Because me marking it up is not helping.
It's our canvas. I don't know that, hopefully you can hear me, but I'm on the road right now. But developing our communication skills, trying to figure out how to communicate with people that have different personalities. I'm doing this door dashing with my daughter, showing her what a real man looked like, all that good stuff. I hold myself to a high standard, right? And promote that, right? Whatever I do, right? So now I get to talk with multiple women all over the world. We're doing something really special. We want to put our best foot forward, right? This is our opportunity to do that with each other and learn each other, right? Make it more than just what we just see on the very skim of it all. All right, look at the big picture, right? And this is the way you're going to be able to develop and learn and be able to prove that you understand how to read structure. So anybody that steps up is going to be elevated, and we're going to back you up every time.
Yeah, even if you don't believe in the 6-month candle like Alicia,
I love y'all to death, man. I prove it every time, and it ain't gonna change. I don't have no ill will towards nobody. You know what I feel about what I feel, and I'm gonna voice that all the time because I defend everyone here. All right. So if the clown suit got to come out, you just call for OG, and he'll come handle it.
The clown suit.
Yeah.
Does anybody want to share? Summer Rain, you making all that money? Marv shared. Kezi. Y'all be tripping, man.
Can't really share at the moment. I'm at work at the moment.
Nobody. That's cool. That's cool.
But GA is looking like a good buy on Friday afternoon for me.
What
Into
was?
GA. GA was looking like a good buy.
Yeah, GA.
And GA.
Yeah, that's
Yeah,
true.
GA and GN.
US all too. You got a bearish OB, but CGA. Ooh. GA looking real saucy.
Yes.
Yeah.
Fib zone 78. Oh, I. Oh, I.
Where's the 78? Do that again. All right.
78 right there.
Oh, right there. Oh, wow.
2 week. If I throw the fib, there's my 50. There's my 78. Let me just delete this so it won't get on people's. Okay, so this is how it would look. Then I drop down to the 4 hour. I already got my chalk. I mean, y'all see the chalk right there. Boom. There's a pullback to let you in the trade if you're going to take it on Friday.
Okay.
There's a move up. If you missed it, you missed it. I mean, you just can't go back and get it. What you're hoping to happen is it's going to pull back and go higher. Did anybody get in this trade?
I did not.
Let's talk about it because this is the exact scenario that we like to see. This is what it looks like. I'm going to close these moving averages so we can actually see the candles. Okay. This is chalk. Change of character. Price is coming down. Then you get the up move that breaks these highs, right? We broke this high, this level, this base. Drop, base, drop. Now we violate that base. This is like, hey guys, we're changing directions. Now you throw your fib on this high right here. As price is pushing down, you can go ahead and place your entry either the 62 or the 78, right? Protect the swing low because price shouldn't break this swing low. This should be solid. If you're entering here, you're going to have a bigger stop loss. If you're entering here, you have a smaller stop loss. If you're entering here, you have a higher probability of catching the move. If you're entering here, sometimes you're going to miss it because it's not going to pull back this far. Either way, you just have to be okay. Because
they're different schematics.
Right. And this move isn't necessarily to see how much money you can make. It's so you can have a buy and reposition for this new sell entry. because you understand that this is just a pullback, and you don't want to lose your equity. You just want to maintain your equity and get you another sell position in order to sell down. So that's GA, and EA is similar. Maybe it's not positioned the exact same way, but it's a lot of opportunity because these pair hand out like a bunch of pips. But if you're looking at this, we broke this low right here, traded back up, closed the imbalance on a higher time or lower time frame. Now we push down.
Ooh, this one look even saucier than GA.
Well, I mean, I think they have equal parts sauce on. But whichever ones that you're doing, there are a million great setups this week. And
Yeah, they are equal sauce.
I like these even better than I like the buys. Some people like these longs, and that's cool too. But I like the sell setups better than I like the buys. But
it's healthy.
In this scenario, you got to push down. We broke these lows. So we should all expect for price to trade back up into the area that caused the break of these lows and then look for a push down. That's how I would personally trade this setup or look at this setup. I wouldn't look at this as a long-term buy because this is a GBP and this is the USD. So I would look for an area, and I don't see one, but maybe you just have to keep dropping time frames to actually find that area that has an imbalance that it took the break. 6 hour maybe.
And you see how you have to look for that. If you do anything other than that, you're going against the trend. You don't want to set yourself up that way. You have to set yourself up for the most amount of pips depending on where you're at in that structure. So if it's the sell, even though it's a long-term buy, but right now it's a sell. Right? So you can't see it any other way. That's what it's telling you. So if we did want the buy, you have to wait for it, or you're going to put yourself in a bad situation.
Yeah, I'll wait for a pullback if I'm going to buy it. But these
that's automatic.
125-ish. That would be about that's those are the limits of my trust area. And we'll probably get this move. But we talked last week about the dollar. Y'all remember seeing this? We took out this high. We got the initial push down. We got a pull back into this imbalance. Now we're selling. Where are we selling to? Well, if y'all remember, we talked about this up move, and we needed to come back to this area before we went higher. Y'all remember that? No, we don't. We don't remember that. You lied.
Remember, you guys were talking about how it went up like 11 weeks.
11 weeks, yeah, 11 weeks in a row.
It was us, bro. It was us. We were there and we talked about it. Like, we should get paid for this.
We talked about
everybody that was in the meeting should get residual income because we're telling the people exactly what's up. Like, you can't make it up. It's not even rocket science. That's the thing. We're just getting into the wave of how the institution moves. Once you're in it, you can't come out of it because you see it, you see what works, and you don't do anything else. That's how you know that you've made it. because you can't help but to see it, and you're not going to make the wrong decision because it's not in the position. When you understand healthy price action and when you understand that it's out of position, you have to wait now because you don't want to make that mistake. You're not going to let yourself make the mistake, and we're not going to let you make the mistake. That's how our group becomes more powerful, because everybody knows what they're looking at.
Yeah, I remember we were targeting those highs in the 2 week.
For sure, for sure. So you know, it's a lot going on. A lot of great trade opportunities and trade setups. So whichever ones that you are looking at, I didn't even talk about any of the JPY pairs, but I'm not trading any of these pairs up. You know, I believe that this is a setup. So if you trade these bad boys, you make sure you trade these bad boys back toward the order block. And the dollar's dropping. So I would be thinking that the JPYs are probably going to get stronger. So if I'm selling this, I'm just holding myself. And then I would expect for this thing to just keep pushing down. I mean, this is pretty much the same scenario that the dollar had, except for, you know, this hasn't broke down yet.
Right. Contagion. Soon you're going to see it. Why is it that GJ looked just like the dollar? Why? And it's late. The dollar just told us what GJ is about to do, and we still don't catch it. What? Come on.
Exactly. Probably on the 1 hour. This is, let me see what the 1 hour look like. This has to be solid. Maybe at the 15-minute. That was an imbalance. It closed. I would be looking at this thing like it's probably not going to break this level. There's a bearish or OB right here. This is probably ripe for the crash and burn. We could probably get a good crash and burn from here. You got the bearish OB. It ain't crossed Selena's moving averages, but you know, you can let Selena be late for the party. She says she ain't touching it until it crosses her moving averages. I wonder what kind of news we're gonna get tomorrow to start this sizzle.
Support.
Y'all know that the news is causing the sizzle. This thing might sizzle off fast. That's 500 pips to the bottom side of this.
Bro, a 0.01. They gonna get tired of me saying it. Just put it in there. You walk away with a bag. I'm telling you.
Yeah, and even if you're biased for this to buy, you know, like we are with the dollar, if you fib this move, your 78 is right in this imbalance right here. And if you believe that, hey, we went up and we broke this high, now we need to pull back to the imbalance that caused the break of this high, then this is right. This is the right area. But anywho, like 1,000 different trade setups. We can't take all of them. So you have to kind of decide which ones that you're going to sit on and just sit on them. And you can't worry about what everybody's putting in the chat.
Oh, and shout out to the minis. The mini lot sizes that you can use rather than a regular lot size.
On the industry,
for people that are afraid of the volatility, like you can just get you a mini lot and do it that way. It doesn't stretch you as hard, you know.
Yeah. I definitely like that for US 30.
Yeah. I don't know that they do it for indices. Do they do it for indices?
Yeah, yeah.
Yeah, yeah.
Okay. Yeah. I don't think Osprey does.
Yeah, it does.
Oh, it does? I saw the currencies. I didn't see the indices. I mean, you're talking about a 401k on a 0.01. You don't miss this. Like, we have all this year coming up, right? Because it don't look good. Like, we think because the dollar's going to fall that the market's just going to go parabolic. Be careful with that idea, right? Because the whole market could be pointing in the same direction at the same time because we've never seen this before, right? It's going to catch everybody by surprise. So you just stack your money up and be prepared for this low, right? If it happens, you can catch it. No problem. It's going to hit the low and then it's going to give you chalk. So either way, you don't even have to catch the low. Just let it dip down there, give you the chalk, come back, tap you in. No problem. We just have to let it play out. We're looking at next year. We're looking at the housing situation. The prices are starting to come down. It's not like a crash quite yet, but it looks like it's coming. We're looking at Bank of America going under with Wells Fargo and Chase right behind it. All this stuff is in the forefront right now. We don't know how it's going to play out, but once we start seeing this stuff happen, we talked about all of this. We talked about a war involving the US before it even happened. This is all pre-planned. We're seeing it live in action. And in the next 20 years, you will be already prepared for all of this to happen again. But the difference is this is going to be the transfer into digital currency. That's the difference between anything we've ever experienced. We're at a technological breakthrough point right now. And this is going to be the first interest rate cut in the new wave of currency. So we're leading into the transfer of wealth. Who's the middleman? The middleman is the bank. The middle class, that's the bank. They're going to eliminate the middle class. That's going to separate the poor from the rich. Oh.
Or, can y'all see my screen?
Yeah.
Right now, y'all are right here in the 29. See this?
Yeah.
So this time next year, you'll either still be here or you'll be right here in the graveyard, in the boneyard, 755. This is the boneyard. And look, we understand, man. Like, life happens. You don't figure it out. You get frustrated. You go back to I know this dude right here. You go back to living your being your best broke self, like living for the next check. And I'm not knocking it or talking down on it because I did it for years. But when you get tired of this and you want to move, look, I know this girl right here. But when you get tired of this, you want to move to the next echelon, you'll do just show up. You'll show up to the meeting. You won't be like this chick here. Where did she go? This dude right here. This dude right here. He should be here.
He was on here.
Or was it?
Yeah, I think so. Oh, no, that was Rashawn.
I didn't see him. This chick right here. She's in the graveyard. So she tried. This chick right here. I know this chick too. I had to reach out to this chick.
Oh yeah.
Don't let these people lay in the graveyard. If y'all know somebody, grab them and tell, hey man, come back. It's time to come back. Because the economy is not, or the situation is not going to get better for broke people. It's going to get worse. Like, inflation is not getting better. They just authorized, or at least one half of the lawmakers authorized 14 billion with a B.
Right.
So it's gonna come hot off the presses, which means that the $200 that we make at the job is going to be a little bit less. bread is going to get a little bit more expensive, and Rose is going to have to pay $12 a gallon instead of her 7.
Sorry, 200 billion for what? Sorry.
Oh, hey y'all, there's a
The war.
Leandra?
I said 14 billion. They approved the 14 billion war package.
Oh yeah, I saw that. I thought you meant for taxes or something.
Well, I mean,
They're asking for
that
the
some kind of
money back from the public. They're going to
They
raise
said-
taxes.
they're gonna pay them taxes with your help, Leandra.
British taxes are already high anyway, so
It's gonna get a little higher.
Raise the taxes.
Huh?
That's not how they're gonna raise the taxes.
Sean said that's not how they're gonna raise the taxes. They're gonna use Alicia's and Leandra's account money to raise the tax.
but I think they've already started they've already raised the taxes. I saw it on the news the other day. If you get paid a certain amount, then your tax bracket's gone up.
Yeah, but the price of everything is gonna go up. Food,
Yeah.
cars, everything is gonna go up.
They can't raise taxes enough to pay for everything. So it's democratized amongst the masses via inflation.
Hey, we should go that way.
That's inflation is the kind of hidden tax
Well,
on
no,
top of
'cause-
whatever tax.
And every time they print 14 more billion, but they say they didn't have enough to pay for your health care. But take this 14 billion. We got enough for that.
Right.
Mhm.
There has to be a flight to safety. Now, if you're a good trader and you have a money,
Checking the box.
you essentially have a money tree. So
look at Elfie. Elfie, why you gotta make that face?
if you're not a good trader, your money must sit in real assets.
Hey, Elfie, why you make that face?
Because I guess what you're saying is true.
Don't want to pay taxes, Elfie.
Where is that?
No, when he said like we don't have nothing for our healthcare, but we gonna what 14 billion or something?
That's how
I
they
don't-
do. That's how they do.
I thought you was going to go hire Michael Jackson's doctor, Elfie.
I'm not in the US, so I don't have healthcare issues.
But you got money. You could
Yeah,
fly him
Elfie,
out to you.
And you've been in the US.
Thank
Elfie. You used to live in the ATL.
I did, yes.
Oh, you did?
Yeah. Elfie was an ATL. She used to go down to all the spots, the Mercedes Benz, the Magic Cities, the home.
Elfie
Elfie, I didn't
throwing
know you
them
was an
dollars.
I
Okay.
know you
now-
live there.
Yeah, she used to go to the club.
Okay.
Yeah, that girl used to go to the club and everything.
Okay.
Elfie, you was at what college did you go to, Clark or Spelman?
I was at Georgia State.
Or Georgia State. I'm sorry. I know it was,
Oh,
them
Steppin'.
HBCUs.
That's
She was
Big
stepping.
stepping.
She probably pledged. She ain't trying to tell us she pledged.
I did what?
You pledged.
I did.
You didn't.
Oh.
Okay. We understand.
Oh my
You
God.
keep it in the wraps.
Elfie, I have a visual of what I think you look like. It's funny.
Ha, ha. Get it, Elfie.
Okay.
You got that Caribbean accent. So you kind of look like Tony Braxton with a little short bob haircut.
Ha.
You don't take no stuff.
Elfie, what? Hey, that was probably definitely Elfie.
With
No.
the gun that shoot the dollars out. She don't put dollars in it though. She put hundos. She put them hundos in there. She don't pay taxes.
Elfie, is Berlin? Do you like Berlin better than A?
Well, Berlin is home, so I can't really, knock it. But I do miss the ATL too. Are we done? Maybe we can stop recording.
Elfie, hey, that's code word for Elfie not wanting the business out. Let's stop this.